Welcome back, everybody, to Project M. John Hutchinson with Traders Reserve. We have a little bit of splice and dice for you tonight. I'm cutting out the section on the deadliest chart pattern since we've had so many questions about this one. So let me hop right into it. I'm about to show you the deadliest pattern in the stock market right now, and I call it the deadliest pattern, and so does Rob, for two reasons. First, most investors don't know about this pattern. Second, they don't know what to do with it when they get trapped in it. So I'm going to show you what that pattern is and how you can combat that in just a moment. Now, the pattern is called an inverted triangle, and it's like a bouncing ball trapped between two lines, and that ball keeps going up and down, higher and lower, week after week. It is this pattern that has made it virtually impossible for most investors to achieve consistent results in the stock market in the last 4 years. Let me take you to a live chart of AT&T so you can see what I'm talking about. And I've staked out the top and the bottom of an inverted triangle here for you in AT&T. This triangle began forming back in September of 2010 and ran through the beginning of February, early February of 2011, and it actually continued on. I'll show you that in a moment. But if you look at the green arrows, I have staked out the higher highs and lower lows for you so that you can effectively follow the bouncing ball. So you see the price goes up to a high, comes down to a low, comes back up to a higher high, comes back down to a lower low, back up to a higher high, back down to a lower low. If you are riding the top of a triangle, you are at greater risk of the price reversing to either the apex or the bottom of the triangle. Conversely, if you're riding the bottom of a triangle, you have price appreciation opportunity to the apex or the top of the triangle. It is that move that we look for at Project M. Let me share with you an example of one such move. In early February, we saw this pattern within a pattern. Let me zoom in a little bit for you. This is called a bullish wedge. And a bullish wedge is formed by a series of descending highs and ascending lows. That means lower highs, higher lows, almost the opposite of an inverted triangle. Since this bullish wedge was forming off the bottom of a triangle, we knew we had an opportunity. What we had to calculate was how much of an opportunity we actually would have. So we did that, and I staked out those for you here. On the bottom side, and this would have been our risk in the trade, the price at that time that we were recommending was $28.07. The cross point at the bottom of the triangle was $27.15. That meant that our risk in the trade was 3.2%. That's well within tolerance of the 5% stop loss we set for most of our trades. The profit potential, however, was 8.7%, where the red line bisected the top of the triangle was approximately $30.50, and that gave us an 8.7% potential gain. Now, that's not guaranteed, but that's the kind of gain we're targeting in Project M. So as you can see, the months move forward. AT&T was a little range-bound and messy, as were most of the markets throughout the month of March. And finally, this was largely news-dominated with the merger announcement with T-Mobile. You could see the multiple moves straight up, breaking through the $30.50 level and continuing on well up to over $31 a share. So a better than 10% gain coming off the bottom of a triangle and heading toward the top, and then using our trading plan's rules to protect the gain and to maximize the potential gain we could take from this particular trade. Now, to spot a triangle, you need to have at least 3 alternating highs and lows in a series. That means you have to go from a high to a low, back to a higher high. You'll know that you're likely to come back to a lower low. If you're looking to go long, you want to wait for this, at least this fourth setup or the 6th setup coming off of the bottom of a triangle. Bear in mind, the median of the triangle is your key point. This point acts as both support and resistance, not similar to a moving average, but it acts as support coming off the top. So as the price comes down, it has to break that apex, and it acts as resistance coming off the bottom. And you can see critical resistance there. You can see support here, support, resistance, support and resistance both, and finally resistance, which culminated in a breakout ultimately. And you can see that even though the price collapsed here in late March, it did not reach a new low. It did not make a lower low in the triangle, but it did ultimately zoom up and create a higher high, an extension of the triangle, if you will, and then finally resolving to the top side with a final breakout. So we're now in a new pattern. This triangle would no longer be live and active because the pricing is not following the same alternating series. This would have been the last point when it broke back above that point to create a higher high, but did not set either a reversion to the mean, to the apex, or a lower low. The pattern was broken. We have to wait for a new pattern to form. So that's a quick recap of an inverted triangle, how to spot it, how to trade it, what to look for. Remember, inverted triangles can form in any time frame and will almost always form in short time frames first, 1 to 5 minute charts, and expand outward into longer time frames, 15-minute, 1 hour, 4 hour, daily, weekly, monthly charts. And I'll show you that very quickly to close this section on AT&T. If we take a look at a weekly chart, I have to scroll in for you here. You can see again, high, low, high, low, high, low, and finally high and breakout. Now, on a 4-hour chart is, I think, the oldest I can get right here. And here's a 4-hour chart. And again, high, low, high, low, high, low, break up, breakout, new pattern, range bound. So a new pattern forming, again, even on the 4-hour chart. This pattern was held all the way through down to 5-minute charts. So you would have seen it form there first and then expand outward to other time frames. And for those of you who have not yet grabbed your copy of the Confidential Project M report, it's never too late. These are profit strategies for the new stock market. The paradigm has changed. You need to change with it. We give you a trading plan for a conservative and an aggressive investor with specific rules to follow for entry, exit, and capital protection throughout the entire trading process. You need this plan. To get it, to get your copy, go to tinyurl.com/T-reserve. Again, tinyurl.com/T-reserve. Grab your copy today. Join us over at Project M. And for all of our members who joined me tonight for this little training session, thanks for coming along, and for everybody who was invited, glad to have you. Next week's topic is velocity. Very fun topic. Look forward to seeing you all again next week. Have a good night.